Hi friends, how are you? Vladimir here with you, and welcome to our weekly review for the first full week of May 2012. I hope you have good weekend, and we're getting ready for next exciting week. Finally, after surprising results on Friday from the NFP, the non-farm payrolls in USA, where the US job market continues to add jobs to the market, but in much lower attempt that everyone expected, and the market seemed not believing the optimism that was there anymore, and they all look for QE numbers 3, 4, beyond 9K. Well, until it happens, we have several opportunities to watch for the upcoming week, and let's start. The most interesting, as I see that, is the Euro Pound. Euro Pound has the weekly divergence. We can see that very strong divergence being built around. Definitely it can continue a little bit lower. We have stiff support area starting right now on the spike, and we have a little bit lower on the close price around 0.80. The next one after that is of course the previous closest price area is around 0.78 and even lower. So the weekly chart has clear divergence just right here around. Let's go for the we have our confirmations on the weekly chart. Let's go for daily chart. On daily chart we have extremely beautiful continuing divergence being built, and we have RSI that tries to reach the extreme area around 20. Will it reach? I'm a little bit doubt, but it's definitely possible and definitely one to watch, because if it will be a beautiful combination of extreme RSI below 20 combined with the weekly divergence, bullish divergence, and we have the continuing divergence on the daily chart, plus we have 20 candles right already on the Bollinger Bands without retracing for the middle, which means we come closer and closer to the end of this down move, and from somewhere around here, or maybe even a little bit lower on the next support, the price will make the stop, huge stop and huge retrace. If it we have the 20 candles right, which means we should expect the pair to go all the way for the upper band, which means we can easily find 0.82 being reached again very soon, right? So it's time to begin the attack for a buy for the Euro Pound. Yes, it could go lower, but based on the weekly chart and the daily chart, we have all the extreme conditions we are looking for. So it's a good time to look for the sell there. The next pair I would like to talk about is Australian against the Japanese yen. The pair reached its 200 moving average. So the pair, just take it down, it's the recording, has reached its 200 moving average, daily 200 moving average, extremely important support area. We have a divergence there, but the thing is, take a look on the MACD. The slope went dramatically down. It could be a warning sign. We're still not exactly on the duplication. We are before the duplication. Duplication should start somewhere around here, somewhere around 80 area. So we might see some correction in the beginning because of the 4-hour chart extreme areas as well, right? We might see some fast retrace for quick correction, but based on the daily chart, the pair has more to go. And if it does continue lower, this area about a little bit above 80 should be the area to begin our attack, to add for our attack, because the first attack is just right here right now, right? Sorry, on the 200 moving average and the previous support area. So if the pair continues lower, we should wait around the 80, a little bit higher, and the next area is around 79.50, something like that. The pair should reach its extreme, probably duplicate itself, create maybe even RSI extreme, build its next divergence around here, and turn around all the way. Australian yen is the pair to watch for for a possible buy soon. We also should remember, right, if we want to attack the 4-hour charts, we have had secret number 3 here. This is support number 1, this is support number 2, and we are now around support number 3. A little bit lower brings us already to support number 4. That's why these areas, based on the 4-hour chart, are good areas to see some intraday, some short-term correction. But based on the daily chart, it looks like we still have more to go. We should attack already, the investor style should attack already, and if the pair keeps lower, we have our next areas to watch and to add more. That's about the AUDJPY. Definitely very, very interesting pair to watch. Pound New Zealandian will be the next one. Pound New Zealandian, as we can see, creates very interesting situation. Pound New Zealandian creates for us the duplication of the previous whole move, right? And we can see we reached very, 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 very extreme support resistance. Sorry, one here. After this one was broken, we have one little bit higher, right? You can see very, very, very extreme area. RSI is looking like reaching its top. The MACD still not created any new high, but we have the duplication move. We have RSI coming to its extreme. We have the stochastic divergence being built, right? So from my point of view, what the pair is about to create for the next period is something like maybe a little bit higher, maybe, then a stop, a small right down, then maybe play around again this high to create the MACD divergence, to create here the stop area for several candles, and then make the drop down. Pay attention sorry, that after the break of the previous resistance, just right here on this spike area, right, the price has never yet returned, and this area has to be retested, because on this area a divergence started, right? So the higher the prices go, the better the opportunities are. I think Pound New Zealandian is definitely a pair to begin the sales, or to add for the sales if you are in. The 4-hour chart is already also with continuing divergence. So based on 4-hour charts, we will see most likely, first of all, the retrace of the 20 MA at least, and then if it continues lower, it will take us back to the 2 area or even below, and if it keeps higher, we will be looking for the daily divergence to be created with a daily extreme, and to take then the whole down move to the 20 MA at least, on the last target on this previous support around 196.90, the level which was not tested yet. Alright, our next pair is the dollar yen. Dollar yen, from my point of view, is extremely interesting. The pair has a divergence already, right? Has a divergence already. But if we go for a weekly chart to look for confirmation, we can see that right at the end of this candle, this week, the prices reached the 20 MA of the weekly chart, stopped at the 50 RSI, and stochastic still not oversold yet. We have a support area just right here around, and we have one lower, which is, from my point of view, more important. The stochastic might go and create for us soon, very soon, a hidden divergence, a bullish hidden divergence, right? On the daily chart, we have already continuing divergence already. So the prices did the attempt to go up to the 20 MA, but never succeeded. Right? Never yet. It looks like the prices can push lower to around 78, maybe a little bit higher, maybe a little bit lower, to around the 200 moving average. Continue with this divergence to create a stop here, and then cause the bigger retrace. We should also pay attention that since the break, right, the pair did one duplication and might do the second duplication, and from this low, right, if it will be reached, that might be extremely beautiful opportunity to buy, right? For conservative traders of you, wait for a break of this trend line. When this trend line will be broken up, most likely it will give the bullish push a much better momentum. Dollar yen, definitely a pair to watch for the attacks. What about the majors, pound dollar and euro dollar? Well, honestly, I would skip them, but definitely an area to watch for the euro dollar, the 130. If it will finally break below the 130, the euro dollar should open the doors lower. I do see the euro dollar goes again to 128.50 at least, then probably to 127 area or even 126 area, definitely. So the only area to watch is the 130. Once it will be broken, the pair should keep lower. Pound dollar, my recommendation is to leave this pair. I personally don't understand the behavior of the price action there. There's a trend line I still watch. If this trend line will be broken, we might consider the sell. Until then, my recommendation is leave this pair as it is. Australian dollar and New Zealandian dollar. The pair just broke the extreme important support area, 102.50. The next important area for the support is just right here, around 101, maybe a little bit lower. The next one is the parity level, or even lower, and then 0.99. Well, almost each 100 pips. The pair broke the Bollinger Bands just right now. The pair changed the MACD to negative just right now. Based to the price action, the pair can go for duplication. Duplication means below the parity level. As long as Australian dollar holds below 102.50, it should be great opportunity to look for the pair to sail at least to the 101 level, then probably lower until the next divergence will be completed. Right? Based on weekly chart, we have more to go, as we can see from the indicators. We have much more to go. New Zealandian dollar, same story. Broke the 200 moving average, broke the sideway move. Now is aiming the duplication of this sideway move. Duplication brings us around the 0.79, maybe a little bit lower even. This is the first area. Then the pair might continue to around the 0.78, and who knows, maybe even to around the 0.77 and below. This is the potential Bollinger Band duplication areas, and here we might take a look on the 4-hour charts then and look for our buys. The pair is riding 13-14 candles already, which means if it continues for several more candles with this beautiful divergence we have already, the pair might create for us very, very, very beautiful buy opportunity. And if we take a look, we will see that New Zealandian dollar also has a beautiful harmonic pattern, so it definitely can make the stop and the retrace very, very, very soon. Definitely beautiful pair to watch. What about the yen pairs? Well, we have the Australian yen. The rest, like Euro yen, Canadian yen, and Swiss yen, and also pound yen, I prefer to skip. The only yen pair I would be looking for, together with the Australian yen, is the New Zealandian yen. The reason, as we discussed on previous week, the head and shoulder that was broken, and we reach our next support and the 200 moving average. MACD going low. Our SI can go and create some extreme duplication potential for the Bollinger Band. Definitely area to attack soon, this pair. And about few words about the indices. For S&P, we still look for the break below this 1340, 1345 area. When the prices will place itself below, it will be beautiful sell opportunity. For the Nasdaq, it looks that the index is going down for the weekly 20 MA. All look very bearish yet. From my point of view, as I said not once, it's just the beginning of much deeper correction for the indices. That is all now, friends, and I wish you an amazing week. A lot of opportunities, as you can see. Be sure to be there. Thank you very much for watching this video. Have a fabulous week, and I send you big good luck here from Hungary, from our seminar in Hungary. And for all the Hungarian friends that listening to me now, thank you very much for being here with me and enjoying the seminar. I wish you a good week, friends. Ciao for now. Yours, Vladimir.